Grug hears rumor at Cave Market. There is a place, someone says, where you can own part of a mammoth herd. Without hunting, without tracking, without risking your life in freezing tundra at 5 a.m. You just give someone teeth, and you own a piece. And if mammoth herd does well, you get more teeth back. Grug very suspicious. This sounds like the thing Elder calls too good to be true. But then Grug hears something else. Some people put teeth in this place and lose everything. Prices go up one day and crash the next. So which is it? Incredible wealth machine or dangerous gambling den? Today Grug investigate the stock market. And the answer, as always, is more complicated than either extreme, but also simpler than most people make it. Let's start from the very beginning. What is a stock? A stock is ownership. Imagine your tribe decides to build the biggest mammoth hunting operation in the valley. You need 10,000 teeth to fund it. You don't have 10,000 teeth. Nobody has 10,000 teeth alone. So you split the operation into 1,000 equal pieces. Each piece costs 10 teeth. You sell pieces to anyone who wants one. Now 200 different cave people each own a piece of your mammoth operation. They didn't hunt. They didn't build. But they gave you teeth to make it happen. In return, they own a share of all future profits. That share is a stock. That is all it is. Partial ownership of a real business. Now multiply this by thousands of companies and create a marketplace where people can buy and sell those ownership pieces every single day. That is the stock market, not magic, not gambling den. Just a marketplace for buying and selling pieces of real businesses. But then why does it feel like gambling? Because prices move every single day, sometimes every single minute. Monday, mammoth operation up 3%. Tuesday, mammoth operation down 5%. Wednesday, up 1%. Thursday, down 8%. Grug watches this and thinks, nobody knows anything. This is chaos. This is madness. This is definitely gambling. But here is what Grug is missing. Short-term prices are driven by emotion. Long-term prices are driven by reality. Every day millions of cave people are buying and selling based on fear, greed, rumors, news, feelings, and complete nonsense. That is why short-term prices look random, because they largely are. But over long periods of time, prices follow one thing and one thing only: earnings. If a business makes more money this year than last year, its stock will eventually be worth more. If a business makes less money year after year, its stock will eventually be worth less. That is it. That is the whole game. Short term, noise and emotion. Long term, reality and earnings. And here is the historical proof. The S&P 500 is an index of the 500 largest companies in America. Since 1957, it has returned an average of roughly 10% per year. Not every year. Some years it dropped 30%. Some years it dropped 50%. 2008 was a disaster. 2020 crashed in weeks. But zoom out. Every single time it crashed, it recovered. Every single time it recovered, it went higher than before. $1,000 invested in the S&P 500 in 1957, left completely alone, never touched. Today worth over $1 million. $1,000 became $1 million. In one lifetime, by doing absolutely nothing. Grug stares at this number for a very long time. So is it gambling? Gambling. The house always wins. The odds are always against you. Expected value is negative. Investing in broad market. Historical expected value is positive. You are betting on human civilization continuing to grow and innovate. Very different things. But here is where people turn investing into gambling. They pick individual stocks. They try to time the market. They buy high because everyone is excited. They sell low because everyone is panicking. Studies show that over any 15-year period, more than 90% of professional fund managers fail to beat a simple index fund. 90% of the professionals lose to doing nothing. Let that land. So what should Grug actually do? Grug is not going to outtrade Wall Street. Grug does not have Bloomberg Terminal. Grug does not have army of analysts. Grug has mammoth teeth and patience. Fortunately, patience is the one advantage individual investors have over professionals. Professional fund managers are judged every quarter. If they underperform for 2 quarters, they lose clients. They lose their job. They are forced to think short-term even when they know long-term is better. You have no such pressure. You can buy and hold for 30 years. Nobody is watching. Nobody is judging your quarterly performance. This is your edge. Use it. The simplest, most proven strategy in investing history. Buy a low-cost index fund that tracks the entire market. Add to it consistently every month regardless of what prices are doing. Never sell during crashes. Leave it alone for decades. That is it. That is the strategy that beats 90% of professionals. Not because it is clever, because it is boring. And boring in investing almost always wins. When market crashes, which it will, do not sell. When market is booming and everyone is excited, do not suddenly invest your life savings all at once. Slow, steady, consistent. Grug call this the mammoth hunting approach. You don't chase the mammoth. You set the trap. You wait. You let it come to you. Now Grug must address the most dangerous thing in the stock market, individual stock picking. Every year, millions of people watch a stock go up 500% and think, I could have predicted that. Then they try to find the next one. They research. They analyze. They feel confident. They put in significant money. It drops 60%. This is not because they are stupid. This is because the market is the collective wisdom of millions of participants who are all trying to do exactly what you are doing. Any information you have, they have. Any analysis you do, 1,000 professionals have already done with better tools. Beating the market consistently is genuinely one of the hardest things in the world to do. Even Warren Buffett, the greatest investor in history, recommends that most people just buy index funds. If Buffett says buy index funds, Grug say buy index funds. There are times when individual stocks make sense. If you have deep expertise in a specific industry, if you have a long time horizon and high risk tolerance, if you understand the business deeply and have genuine insight. But for most people, the boring option is the winning option. Diversification across entire market. Low fees, long time horizon. Consistent contributions. Grug knows this is not exciting. Nobody makes movies about the person who bought index funds. But at the end of those 30 years, that person is very, very comfortable. Watching the exciting stock pickers try to explain to their tribe why their genius investment is down 80%. A stock is simply partial ownership of a real business. The market is a marketplace for buying and selling that ownership. Short-term prices are driven by emotion and look random. Long-term prices follow earnings and business reality. Over long periods, broad market investing has historically returned around 10% per year. Professional managers often fail to beat it. Your edge as an individual investor is your time horizon and your ability to be boring. Buy broad market index funds. Add consistently. Never panic sell. Leave it alone. That is the strategy. That is what Grug would do with 10,000 teeth. Money panicking goes backwards. Money patiently compounding goes forward. Next video, Grug discovers debt. Tribe thinks debt is always bad. Grug will explain when debt is a weapon and when it is a trap.